What's going on, folks? This is Dmitry back again. In this video, we're gonna check out beginner's guide into stocks and how to invest in them. Yeah, it's a little bit deviation from what I usually do, real estate and all that. However, the reason for it is because I realized that the personal finance also involves for stocks, also involves markets and things, and you need to also understand how it basically correlates with each other. But I mean, it's not definitely like direct connection, but there are a few. So and understanding, because you can also park money in there and things like that, so that you can juggle between the two, so do the hybrid situation. But other than that, that's pretty much yeah, you can do whatever really whatever strategy you want to. But I think I feel compelled to share with you the beginner's guide. What is stocks and markets and everything like that, how to invest with them, how to invest in them, how to get the money, the tax applications and things like that, or a little bit at least, since I'm not tax professional or anything. But it's a good thing to discuss on this channel. So well, to begin with, we're just jumping right from the beginning, how to invest in stocks, right? So let's start. What is stocks? What is stock market in general? How, like, what kind of beast is that? So, well, stock markets in general, as far as I understood, is that you're trading online with the shares of the companies, right? Shares of those parts, basically digitalized, I guess, part, not like in the real world, right? Like in the day-to-day, you don't really see those, shares, stocks, papers, whatever. So, but you technically is a couple of clicks really in real life. So, and that's pretty much how you trade stocks, right? So, but we'll get to that later. However, so what is the stock in general? Stocks is where you basically partake or like it's a part of the company, so to speak, public company, and it's done by the company to issue stocks to you or to the public, basically, for them to trade, for them to just partake of the basically goodness. The reason they do it is because they want to raise the funds. So what happens was they basically sell you technically part of their company, and you own it. It's not like you can do and slam the door out and say, hey, I'm the boss here. No. So no, not like that. But you are technically an owner of the percentage of the company that they give it to you. So really good example could be also like a Twitter situation where Elon Musk bought it, and there's like a percentage of the company that he bought, and he actually technically calls the shots right now because he's the biggest owner of the platform, right? So there are a few other entities that own it. So, but he basically, the majority of the shares you basically the owner. So, right, but as you gradually get there, if you want to buy more, you obviously at some point, I guess, you will be able to be an owner. But it depends, right? So there are a few, really, we're not going to go into very much depth on what's going on, how to do it, but just to suffice to say, for the beginning stage right now is that you go to a platform, to a brokerage, you buy the stock, and there you go. So you got the ownership of it. The benefits out of it, and if you just start searching about it, start realizing what's going on in there, that's where you understand, you can partake the value of that asset, how it grows over time, and then it gets basically more expensive, and then you sell it, and then you basically get some money out of it, or there are also dividends that you can take. So this beast is that where you buy stock, and then the percentage of the ownership that you have there, let's say you got dividends, few stocks, or bought few stocks, they pay out dividends. Dividends is that basically profit that they obliged to pay, or they agreed to pay based on conditions and things like that, to the buyer, to the owner of that stock, basically to you, over a period of after some period of time. right? So they made some sales, they made some stuff, and then so you own like 5% of the amount of shares that they have, or like this is a huge amount. Don't know to think about it, but they pay it to you, like over quarterly, whatever. So and they definitely pay, so they just basically put in your brokerage account. So, but in a nutshell, I actually went to off the rails really, and not according to my notebook, but that's pretty much another way of investing. So, but the stocks is that company issues those for people to trade. If they want to be an owner and things like that. Of the certain percentage and things like that. But the main reason is that I put it here, so to raise money, to raise capital. So that's pretty much the idea of why they sell it, or why they to give it to the public, and not give it to the public, but have an option to sell it to the public, so that the public can partake of the growth, whatever. So, but that they raise the capital basically, so you give them, and then they basically sell it to you. But in a nutshell, you don't see, like in the real world, like 100%. You, depending on where you sit in the analytical, so there's a lot of things, but day to day, if you like have 9-to-5 job, whatever, just regular person like like me, so I don't really see and go and trade stocks or whatever. So just go to brokerage, buy it, and then there you go. That's pretty much it. So and there we go. So the stocks, we know what the stocks is. So brokerage account now. Brokerage accounts is that usually organizations that are allowed to be basically not fiduciary, but more or less a person or a party that can sell that stocks to you. So it's not directly a company per se, like let's say Pepsi Cola or whatever. It's not directly them basically give it to you, like hey, here's shares and give me money. No, it's more or less the brokerage account is that like they take that and then hey, there you go. So we have the representation of sorts, and then they make it public, and then you come in and say, hey, I want to buy this stock, and then you just buy it in there, and there you go. They just assign it to your account. So in the practical thing, brokerage account is where it's done or provided by, or not provided. You open an account with, like, let's say Fidelity. It's not sponsored or anything. It's nothing in this video that's names been mentioned. It's not sponsored or anything. So Robinhood, Webull, or other good other folks that provide brokerage accounts. That's where you can open them, register, things like that. So, and then you can trade a stock. So you basically put the the name of the company, and then basically you see the buy option, you buy it, and there you go. So you got some stocks in your portfolio. So portfolio is where your list, or basically, well, let's say we can encompass it, I guess, a list of the stocks that you own, and a lot of things can be like you can be mutual funds and things like that. So all those terminologies, they basically names of the tools that can be partaken. So we'll just get to that just in a little bit. But the brokerage, it's for the purpose of a discussion. Brokerage account is you open it. It's basically sort of in the very crude description, is basically sort of like a bank account kind of thing, but with the ability to buy stocks and and kind of do that. So it's very crude example, but it's kind of gives the perspective of how it looks like. So you got that internet option account. You can go there, you see it, and then you got some money in there, and then you want to vote for, like, you want to buy this or that stock, and then you go and buy, and that's you got it under your account. So that's pretty much the brokerage account. Buying a stock, there are multiple strategies and things like that, are basically investing in that sense. There's a lot that you can do. You can do your own thing. You can partake the financial advisor with the fee. Obviously, you need to pay that. But there are certain fees. It depends on the brokerage and things like that. And there are a few other ones that kind of necessity. So for me, it was like I really didn't know about, like, when I started all that. at the beginning with. So like a retirement would be in there, and then like 401ks or Roth and things like that. So all those tools that I just now mentioned, they're like they are involved in stocks, right? So and that's how they kind of relate. So they relate to stocks really. So on your own, usually what people, a lot of people do, they go research the stock, go research the company, and they make that decision based on the company, resources, based on company management, based on the papers like income statements, accounting, books, all that. So there's a good amount of things that needs to be analyzed and researched and see, what, hey, this company is good or this company is bad, accounting is good, accounting is bad, or things like that. It's very tedious, very long it is time consuming because you got to research things, in the sense that, like, if you want to do brokerage, if you want to trade specific account or specific stock or specific company, right, or take an ownership in a specific company by investing and buying stocks. So benefits, obviously, you can partake real good growth, real partake good in dividends and things like that. So it strictly directly comes to you because you're direct sort of buyer, and there's no another person in the middle or anything like that. So I will get to in the next strategy that we'll discuss, actually a few others. But in any case, so that's going to be the benefit, right? Obviously a little bit more risk there because it's directly falls on your shoulder to make a determination on whether you want to buy or whether you want to sell. So that's that, and that's your own strategy, right? There's kind of hybrid strategy also, like with you buying a mutual fund, also type of stock that kind of represents the fund that trades specific stocks. So it kind of gets really kind of sort of mumbo jumbo really in the sense that one trades what and what. So well, as far as that's how I understood. Like at the beginning, I was like, what's trading what? But in a nutshell, you getting a stock, really, you're buying a stock, really, as like of a mutual fund, So it's kind of represented as a stock there, but as you buy it, that mutual fund, their whole business idea is that they trade also those like specific stocks, right? They have like percentage in energy, percentage of the companies in energy, percentage of the companies in like IT, things like that. So basically they trade those, they sell, they buy, they try to make money, and then their profit that they make, well, for whatever like growth, like their stock grow or dividends that they pay, if they pay, they either pay those to you or the stock grow because of the investments and things like that, because of the trades that they do in that sense, both of the stocks that they own, things like that. So it's kind of that hybrid thing. It kind of in that sense. So it's really, you don't really partake, but partake. So it's kind of like not that obvious, That's another strategy. Another one also people use is to do like based on the financial advisor type of thing, so that they partake the services of theirs. They have advising and so certifications in that sense. So I'm not a financial advisor or anything, but and can tell you whatever, but in reality it still falls under your shoulder, like whether you want to go proceed with that or not. Financial advisor is not gonna they're gonna consult with you, but you're the one that, hey, giving a green light or not, but because it's your money, right? At the end of the day. So that's pretty much like two major like strategies that usually folks utilize. Three kind of 2.5, 3, whatever. So however you want to consider that. But personally, I kind of do both, like specific stocks, and then there's a hybrid. There are a few mutual funds that I also try to park my money and things like that, so against inflation and all that. So that's pretty much what I wanted to share with you. So complete the beginning. So a complete beginning guide of how like invest in stocks, what is stocks, and you know what kind of beast is that. So hope you guys enjoyed this video. Like and subscribe down below. And you know, to wrap it all real quick, stocks, you basically go, you partake, and then or you buy them or sell them, and then you are able to, you know, get the benefits, or in some cases lose some money, because you know, some companies underperform, and there is also that. So possibility of the risk is there. So you know, just be mindful about that. So, and yeah, there is a possibility that the value of the stock can go down. So it's good thing to mention. So make sure you do research, make sure you understand what's going on, make sure like what are you investing in is a good company and things like that, and all that, you know. So but risk is there always, so be mindful about it. So there you go, guys. Hope you guys enjoyed this video. Hope you understood what's going on and what is it about the stocks and accountings and stocks and just in general what's going on with that. So like and subscribe, like I said, down below. It very helps. And because yeah, and like not only me, but you know, well, that's actually me. Yeah. So but it helps me a lot. So thank you very much again, guys. So see you guys next time. Let me know in the comments below what you guys wanted to also you know, discuss about. So we'll be more than welcome to address those in the next future videos. So see you guys next time. Bye bye.